Will Hobbs is the head of investment strategy at Barclays Investment Solutions. Will, a very good morning to you. Good to have you with Neera and myself this morning. The best quarter in 5 years in US stocks. Do you think that the new NAFTA deal sets off the fourth quarter with a bit of a bang for carry-through?
Yeah, morning, Manus. It's quite difficult to see how different the new NAFTA is from the old NAFTA, and to be honest, I mean, there's tweaks rather than sort of big game changes within it. But in a sense, markets should receive this well, because what it does do is reduce the potential for this kind of trade skirmish that the US is picking with a lot of its trade partners to become multilateral. This now looks like something that's more a beef with the Chinese, basically. And while that trade war remains kind of primarily with China, it's something that's certainly, even if they go all in, it's something that's unhelpful for the world economy, but probably not something that sort of ends the cycle, so to speak.
Will, JP Morgan has basically changed its baseline scenario now and thinks that we're going to get 25% tariffs on all Chinese goods in 2019. They've then changed their call on the yuan. They basically see it moving to 7.19 by the end of September 2019. Well, let me first ask you whether you see that as your baseline scenario.
Yeah, I mean, I think the all-in is likely.
25%.
25% is probably, that's what we've got to, that seems to be the way. Now, the US administration has had a sort of, got a number of problems with the way that Chinese has been conducting itself in the world trade. And to be honest, there's quite a lot of sympathy around the rest of the world with how some of the complaints, I think probably some of the complaints with the way that the US is pursuing it is more about the way it's pursuing it rather than the actual beef itself. Everybody wants this idea, this IP transfer story. That's something that seems unfair now. But on the Chinese side of things, this Made in China 2025, that seems to be, people seem to be sort of, who are reading the Chinese authorities, are suggesting that they're going to be very reluctant to give up on some of these goals. So you've got this sort of prospects of a stalemate, and you've got tariffs likely remaining in place for some time. The point, though, is for us on the Chinese side of things, the authorities probably have the will and the means to staunch the problems. You're already seeing fiscal and monetary easing to a certain extent. That should help support the economy, even if you are seeing some problems show up in the PMI.
Well, as Neera was just saying, this cracking piece from JP Morgan, 25% is their base case scenario. They say it's going to be the first re-rating of stock earnings under the Trump era. But they do go on to say that actually the yuan will trade lower by the end of this year. There's not going to be much policy support from the PBOC. We're in for the long haul, and we're in for a much lower yuan. Would you concur with that view? The kind of levels that they are talking about, Will, is breaking the 7 level and even getting to around 7.20 by the start of next year.
Yeah, we're currently not making big bets on the yuan, to be honest, Manus. We wouldn't necessarily agree with that just yet. Certainly the Chinese authorities, it's not necessarily in their interest to see a materially weaker yuan. That's something that sort of would actually would endanger some of their objectives. They've got some levers to pull domestically, but we're not sure if the yuan is one of those.
What does this mean for your positioning around EM Asia? Because when it comes to emerging markets, that's the area you're positive on. So you're sticking with that call right now, given what you've just said about the yuan? Yes, and
one of the things, I guess, there's two things happening there. I mean, one is that the damage done by this trade war is finite to a certain extent. As long as it remains bilateral, it does hurt China a little bit, but China can absorb this. And like we say, you are starting to see some of the sort of fiscal easing coming through already. And more broadly, actually, what you find is that because you've got such a strong US economy, and you've got those kind of fiscal steroids coursing through the economy's bloodstream at the moment, that should, because the US economy is going to be unable to satisfy that demand on its own, a lot of that economic warmth is going to spread to the rest of the world. Asia will be one of the beneficiaries, and basically it looks cheap.